Don't let anyone other than a licensed mortgage broker ever tell you that you cannot get a mortgage. If you're a first time buyer, if you're looking to remortgage, don't listen to the media, don't listen to friends or family saying you can't get a mortgage, now's a bad time to buy, or anything like that. Always remember that the economy is what's in your pocket. Unless you've talked to a licensed mortgage broker that's looked at your individual circumstances, do not rule yourself out from getting a mortgage. It's very rare that I speak to a client and I can't get them a mortgage. 9 times out of 10, I can get you a mortgage. Now, I will say sometimes it might not be for the amount that they want, but very rarely is it that I cannot get someone a mortgage. My name's Anthony Lindsay, and I'm going to be talking through everything you need to know about getting a mortgage. But before I do that, let me talk to you about the East London Business Expo. The East London Business Expo is taking place on March 21st, 2020 at City Gates Conference Center. You're going to be able to meet lenders, you'll get to meet brokers, you'll hear and ask questions, you'll learn from others, and you will network. So if you're looking to get a mortgage, if you're looking to network, or even if you're a property investor, the East London Business Expo is where you need to be to get the information, to network, and to be able to ask questions. We're going to be talking about mortgages today. My name is Anthony Lindsay, and I've been in finance for over 30 years. So when you speak to me, you're not speaking to someone that's never purchased a house before. You're not speaking to someone that doesn't understand the process from very different directions. You're speaking to someone with 30 years worth of finance experience. But make sure as we go through this video that you watch it all the way to the end, because I'm going to have some great tips, some great hints, and some great information from someone who's experienced in not just brokerage, but also in credit, in finance, and just in general information. Buying your first home is not rocket science. A lot of people, especially people in the mortgage industry, will make it seem so complex. It's not a complex thing. But if you understand the key parts of it, it will make sure that you fully understand how to get a mortgage, how long the process takes. But ultimately, it comes down to three things. It comes down to credit, it comes down to income, and it comes down to deposit. We'll be talking about each of those things. We'll be going through the full mortgage process so you can understand what to expect when you start the journey. But remember, it always takes a lot longer than people think. Always use a broker. I'm going to stress that throughout this. Now, I've worked in finance, as I said, for over 30 years. I was a branch manager, an area manager, and I always thought that the only reason why you'd ever need to use a broker is because you have bad credit or because there's something unique about you. That's not true. 75% of all mortgages in the UK are done through a mortgage broker. The reason that is because a mortgage broker is going to do more than just get you a mortgage. A mortgage broker is going to help you with admin. In my case, I even help my clients negotiate their purchase. On average, I'm saving them 10, 15,000 pounds on the purchase. So a mortgage broker does more than get you a mortgage. Now you might say, well, Anthony, you're just saying that because you get paid to do mortgages. Yes, I get paid and I'm worth every penny. But keep in mind, the money that you think you're saving by going directly to a bank, you might not actually be saving. Because when you go directly to the bank, they can only speak to you about their products and their services. So they may be giving you their best rate, but they're not giving you the best rate because you're unable to compare that to other lenders. Banks are there to help. When you watch this video and when you look in the description, I may not have 100,000 views because this is not the sexy thing saying, oh, I'm going to tell you the things that your bank won't tell you. This is not saying, oh, your bank is hiding things from you. I'm just going to give you the facts. Banks are there to lend money. They make money by doing mortgages for you. So don't feel that they're there to trip you up. They want to lend you the money, but they want to make sure that you can repay. So they want to make sure that you're getting something that is affordable to you. My name is Anthony Lindsay, and I want you to scan this QR code. And the reason is I want to get to talk to you. I want to get to be able to find out your individual circumstances. And always remember, your home may be repossessed if you don't keep up the repayments on your mortgage. Frequently, people are surprised when they scan the QR code and they book an appointment or call me and I actually pick up the phone. I am a real person. I am a licensed mortgage broker. And although you might see me on YouTube, you might see me on LinkedIn and at events, I've done a book, I'm a real guy. So don't forget, you can reach out, you can speak to me, you can put your comments in the comment section. I'm going to give you a few top tips in getting a mortgage as we get into the next part of this presentation. When you're speaking to a mortgage broker, don't just talk about rates. Now, rates are important, but what's more important is your payments. So each rate is going to be different depending on your circumstances. So the first thing people will ask is, well, what rate are you going to get me? I'm going to get you the best rate that you qualify for based on your circumstances. So if you're a vanilla client, so that's someone UK passport, really good income, great deposit, has been at their job for a while, great credit, you're a vanilla client, then the rates that you see banks advertise, which are the better rates, maybe you'll qualify for that. But if, let's just say, you don't have a UK passport, or maybe your credit history isn't perfect, or maybe you're looking for a really low deposit, you're going to get a good rate for you, but it may not be the best rate based on the profile of a vanilla client. Pounds, not percentages. When you speak to me during the mortgage fact find, I'm going to ask you, how much do you have as a deposit that you can prove with a bank account? I need to know the pound amount. Don't say, well, I have 17% or 13% or 4% or 5%. Give me the pound amount. The pound amount will help me determine how much you physically have. And keep in mind, you will need to prove your deposit with a bank account. And the other reason why you don't want to say a percentage, you want to say a pound amount, is because a percentage is a sliding scale based on the house price that you're purchasing. So these are my top tips. Remember, pound payments, not interest rates, pounds, not percentage. The term determines your monthly repayment. This is a pretty straightforward concept, but if you've never done a mortgage before, maybe you don't understand. If you're borrowing, let's just say £400,000, and you say, I want to pay that off over 20 years, your payments are going to be higher than if you were paying that off over 35 years. So think about the term. In most cases, we're going to do a longer term to make your payments affordable, keeping in mind most mortgages do allow you to overpay by 10%. You'll need to look at the details of the specific mortgage, but as a rule of thumb, lenders will allow you to overpay by about 10% without charging any early repayment charges. I stress this to people. I say it in my videos. I tell people during the interview. It always takes longer than you think. And the reason why it takes longer than you think is because while you are getting a mortgage, you're still running a household. You're still going to work. Life is still happening. So as most clients will contact me and say, how quickly can you do this? I'm like, well, I'm pretty fast. And I move quickly, but maybe they struggle with the technology of downloading their pay slips or their bank statements or whatever. So that can delay the process. The average mortgage is going to take 4 to 6 months. And that's from when you have the offer accepted. So top tips: payments, not rates; pounds, not percentage; term determines your monthly repayment, and it takes longer than you think. Here's a great formula. Mortgage brokers hate when I share this. It's covered in my new book, A Mortgage is a Really Big Loan. The formula is credit, income, deposit, and criteria. If you can understand those 4 things, you'll be able to understand what kind of mortgage you qualify for. So credit will go through, income will go through, deposit, and criteria. So your credit. Here's what you want to do if you're getting a mortgage. Get your credit report. I worked in litigations and collections for over a decade. I know more about credit than most people do. I've probably forgotten more than most people do. But with your credit, you should be checking your credit file at least once a year. I'd recommend every 6 months. The reason why I say that is a lot of things that may appear on your credit that you're not aware of might take 3 to 4 and maybe 5 months to completely resolve, but it will certainly take at least 2 months to update. So if you don't check your credit report regularly, and then when you go for a mortgage, there's something that needs to be resolved, either A, you're going to have to move forward with that application with that blip in your credit, or you're going to have to wait until it has been resolved. So check your credit report at least once a year. I'd recommend twice a year. Check your credit report before you go to the mortgage broker. That way you know what things to point out to them. While you're getting a mortgage, stop applying for new credit. A thing that people don't understand is we're not talking about credit score, we're talking about credit profile. I'll explain a little bit more about that later. But stop applying for new credit. As you prepare to get a mortgage, you should be getting everything tidy and clean and making your application as strong as possible. So stop applying for new credit. Clear small balances. I had a lady who came to me and she had, let's just say, £40,000 in savings, but then she had £20,000 in outgoings. I explained to her it's better to pay off all of those things that you're paying out and have a smaller deposit than have a big deposit and you're losing money on your affordability with repayments. The other thing is, think about this. The money or interest that you're getting on your savings is probably way lower than the amount of interest you're paying on servicing that debt. So if you have small credit cards, if you have small things that you owe, if possible, just pay them off, even if that means you're going to have a smaller deposit. Be honest about what's there. I frequently talk to people and they'll tell me one thing about their credit profile, but when I actually see their credit report, which I will need, it's a completely different story. Or they have a long and sometimes genuine explanation for the blips on their credit score. And as much as I might understand and even sympathize, what's on your credit score is what the bank or lender is going to look at when assessing your mortgage. So check your credit report, resolve anything that you can resolve, and be honest about what's there. If there's things outstanding that you can clear, go ahead and clear them. So that's credit. Let's talk about income. We're going to talk about your income now. Know your employment status. When you're getting a mortgage, one of the key things that the lender needs to know is how you're going to pay back. And if you're not working, if you don't have an income, or if your income is not stable, then they're going to have to take that into consideration as far as the mortgage. So know your employment status. Are you full-time? Are you part-time? Are you 0 hours contract? Know that. That will impact the type of mortgage that you can get. Are you on probation? I don't mean with the police. Are you on probation with your job? Did you just start? So some lenders will not do the mortgage or will not proceed until you're off probation. There are other lenders that, as long as you're employed with a large company, so a nationally or internationally known company, they will take your mortgage application with just a offer letter. So as long as you're starting within the next 3 months, that lender will say, yeah, well, they're going to go and work for, HSBC. It's a reputable firm. They provided an offer letter. We will go ahead with the mortgage based on the salary that's on that offer letter. The other thing to consider is, what does HMRC say? So check your P60. This is explained this way. If you're not paying taxes on it, and if HMRC does not know about the income, you can't include it in your mortgage application. So if you're getting paid cash in hand, if it's not registering with HMRC, then you're not going to be able to include it on your mortgage application. So check your P60. And this is also important for people that maybe have a base salary but do a lot of overtime. So if you're one of those people who has a base salary of, let's just say, 30,000, but maybe you're a nurse and you do tons of overtime, your P60 might reflect that your previous year's income was 55,000. We can take that into consideration because lenders understand and appreciate the fact that people that work in certain industries have a decent base salary, but a lot of their income comes from overtime. And the other thing in this same vein is second income. I've seen people approach me as someone who's been doing this for over 30 years and say, oh, I have my full-time job at ABC Industries and I have this second job. They think automatically the second job will be included in the application. Not so fast. You have to have been at that second job for a reasonable amount of time, firstly. Secondly, they want to make sure that it's sustainable. So if you've just started that second job, the lender's going to say, did this person recently start this second job just that they could qualify for the mortgage? They'll also say, is it sustainable? If this person is working full-time at ABC Industries, but then also working part-time at another job, and it's just too many hours, it doesn't seem sustainable, they may not include that second income. Quite frequently, even if they do include a second income, they don't include 100% of the second income. So you're working two jobs, they'll include 100% of the primary income, but they might just include 60% of the second income. And that's if they include it at all. So that's income. Let's move on to deposit. So deposit, you're trying to get a deposit for a home. Many people find it very difficult saving up enough money to purchase a home because the deposits and the house prices can be really high. I have a tip that might help you purchase your home with a 0% deposit. We'll get to that. But when you're building up your deposit, make sure that there's a clean chain of where that money came from. I'm Jamaican, and we have something in our culture called pardner. I've been doing mortgages long enough to know that in every culture, they have what I refer to as a cultural way of savings. So it usually looks like this. One person is in a partner, the banker. So that's the person that everyone sends the money to. And then each month, someone gets that lump sum of money. Don't do it. Not a good idea. During Windrush, maybe that was a way of doing it, and maybe it was necessary because people didn't have access to banking. But you do now. You can open a bank account in your phone. So don't do these cultural savings account where you're moving money from account to account to account to account to account. Banks don't like it. And if you think about it, it's not actually that smart. Because if you put in £5,000 into the partner, yes, maybe you have access to the £5,000 sooner. But at the end of the day, when the hand has gone all the way around, you've only got your £5,000 back. What about opening a high interest savings account? This is what you need to do. And this is the best way to make sure that you're saving and you're getting your deposit together the right way. What you want to do, open a high interest savings account. You can go to moneysavingexpert.com, open up a high interest savings account. When you get your salary each month, put your money in your savings account. This way, the money you're saving will actually generate interest. I'm not giving tax advice. I'm not giving legal advice. I'm just explaining basically how savings accounts work. Make sure you speak to an accountant if you want to know about the implications of interest from savings. Banks want to know where the money came from, so they'll want to see that it's come from savings. They want to see that it's actually your money and not just money that someone has put in your account for you. Gifted deposits. Now, it's very likely that you might have someone that wants to support you by giving you a gift towards your deposit. Make sure you disclose this to the mortgage broker in advance, because some lenders will say, yeah, we can take a gift from a parent or a sibling, but we won't take it from friends. Others will take it from friends. Some will limit the percentage that is gifted to you because they want to understand that you have some skin in the game. So let's just say you needed a £10,000 deposit. Some lenders would say, well, we'll allow you to take 2,000, but the other 8,000 has to come from you. So gifted deposits are acceptable, and there's different specifications with different lenders. So make sure you're clear and honest with your broker about where the money came from. Here's some good news, which some people don't realize or understand. The deposit that you have towards the purchase of your home, it doesn't come out of your bank account until very close to when you get your keys. So probably 2 to 3 weeks before you get the keys to your new home, do you actually have to release those savings. For transparency, you do need to demonstrate that you have the savings at the beginning of the process. If you're getting a gifted deposit, let me just give you a tip. I know that I speak to clients and sometimes they say, well, my mom is going to give me 20 grand, but I don't want to get the money from my mom until I know that I'm getting the mortgage. We can work that out. But if you are saving for a home, you want to make sure that it's traceable. If you're getting a gift, you want to tell the mortgage broker. And once that money is put together, another tip is put it in a high interest savings account. Usually the savings accounts that are attached to your current account aren't going to give you the highest interest rates. So if you go to Money Savings Expert, which is a trusted site, they can show you the comparisons and they'll talk to you about the implications and periods and terms, etc. Always do your due diligence. And remember, your home could be repossessed if you don't keep up the repayments on your mortgage. And lastly, let's talk about open banking. This is a great innovation in banking. So open banking means, unlike previous years where you might have to provide bank details through bank statements, some lenders use what's called open banking. So once you start the mortgage process, they'll ask you permission to sign up, get you signed up for the open banking system, and that will give them access to get the documents that they need, which is usually 3 months bank statements. So that's the deposit. We've talked about income, we've talked about deposit. Now let's talk about how you might be able to buy your council house or maybe buy from your landlord. Great news for a lot of people, and please share this video with people if this is something new to you. If you're buying your council property and you have been given a council right to buy discount, you can use that discount as the deposit. Probably 3 or 4 times a month, I do mortgages for people that are buying their council property. They've been given a discount and they use the full discount as the deposit. That means they don't have to come out of pocket for the deposit. They do have to pay for legal fees and maybe some other things. But as far as the deposit, it's taken care of from the council right to buy discount. If you're considering buying your council property, make sure you get the application in, make sure that you get the process started, that they can come out, do the valuation. If you're living in a council property or a housing association, you could get a discount, whether it be the right to buy discount for the council house or the housing association. It's a great way of boosting the probability that you'll get a mortgage, because maybe if you can't use the deposit, the discount as a full deposit, it might mean that you just need to come out with less out of pocket in order to purchase the property. So it would be the discount plus the amount that you've saved and put towards it. I'm making this video in December of 2026, and let me tell you, now is an amazing time to buy. The Renters Reform Act is coming into force next year, in the next couple of months. Landlords are selling properties. People are unsure about the property market, but because the economy is what's in your pocket, it's a great time to buy. I've been saving people thousands, and in some cases, tens of thousands of pounds on their purchases because a lot of sellers are finding it difficult to sell. This means it's a buyer's market. So let's just say you have been living in a property for a while. You have a good relationship with your landlord. Why not make an offer? Because he or she might be looking to sell that property. And it's a lot better for them to say, well, this property is worth 300,000. I will sell it to you for 280,000. And then you can use that 20,000 as your deposit. That's called a concessionary mortgage. So I'll explain that again. You're living in a property, you have a good relationship with the landlord, you make the landlord an offer. That landlord says, well, the property is worth 300,000, but I'll sell it to you for 280. Why would they want to do that? Well, it's simple. It's a lot easier. It's a lot quicker. And it ensures that they're getting a buyer. It's easier for you because you don't need to move. It's easier for them because they don't then need to get you out, put it on the market, and risk not being able to sell it. So, landlords, turn around when I say this. I don't, are you all turned around now? Listen, buyers, make a ridiculous offer to your landlord. Just make an offer and see if you can work something out. It is in their best interest, if they're looking to sell it to you. You're the person that's already there, but you'll need to speak to a mortgage broker. So make sure you give me a call. So that's council right to buy. You can use the right to buy discount as your deposit. That's also what's called a concessionary mortgage, different product. This is where you look to purchase from your landlord. These are two strategies which would enable you to potentially buy your home without money out of your pocket. You're just using either the right to buy discount as a deposit, or you're using the discount that the landlord is giving you. Now, these are unique products in the sense that you want to make sure that you speak to a broker, find the right lender, make sure that you meet the criteria. But these are fantastic ways of getting a new home or the home that you're living in for less than you would think as far as what's going to have to come out of your pocket for your deposit. I'm going to stress this. It's very self-serving. Always speak to a broker first. As I said at the very top of the video, speaking to a broker is going to save you time. It's going to save you money. We are licensed. We are professional. I was a bank manager managing various branches in the US and UK. And as a branch manager, I had amazing staff because I'm just awesome. But all jokes aside, my staff were amazing. And if you dealt with any of my staff in any of my branches, they'd always provide a good service, tell you the best products that that bank was offering. And that's great. But they're not going to have the skill or expertise as a broker. And the reason why, as a broker, I'm dealing with 15, 20 different lenders. I have to understand the criteria for each. So when you're speaking to me, I'm able to say, all right, this person has a skilled worker visa, so I can rule out these branches. This person has had a missed payment in the last 4 or 5 months. I can rule out these banks. I'll always find you a lender, but the answer won't just be no. I've had a lot of people come to me with the false conception that they can't get a mortgage because their lender has told them, we can't lend to you. That doesn't mean you can't get a mortgage. It just means that that particular lender cannot lend you money for whatever reason. If you had gone to a broker and told them the exact same circumstances, they would probably say, yeah, ABC Bank won't lend to you, but these other banks will lend. So always go to a broker and don't feel like, oh my gosh, I have to pay this person. A good broker is worth their weight in gold because they're saving you time. They're saving you money. They're helping you with the process. They're giving you advice and giving you guidance. And a good broker, which I consider myself to be a good broker, is going to explain everything the way that you want it explained. I would say when you go to a broker, never, ever, ever pay your broker in advance for services that have not yet been rendered. I hear nightmare stories all the time of people who've gone to a broker, especially when people are in a specific community. So it might be, some ethnic community. It might be people from Zimbabwe or from Nigeria or from Ghana, and they have this broker that's like, yeah, I can sort you out, and just pay me $850 up front. Don't do that. Always pay after the service has been rendered. And I'm not knocking anyone that does that. And I understand why people do that, because some people won't pay you after you've rendered the service. But if you're a first-time buyer, find someone that's going to talk you through the process, that's going to deliver a service and then charge you. And that's how my firm works. We'll do all the work, all the due diligence, talk you through the entire process. And then when we have produced the agreement in principle, that's when you pay for that application fee. Talk to the broker at least 6 months prior to when you think you're ready. Prior to when you think you're ready. Don't go to the broker when you've found the house that you want and now you're rushing through the whole process. The reason why I say that, if you go to a broker 6 months in advance, They can give you a framework of what you will probably be able to secure in a mortgage. There might be some bumps on your credit profile. There might be other things going on that you can now resolve, clean up the credit report has updated, you may need to save some more money. There may be some things that you need to do. That's not to say if you're ready to roll, don't speak to a broker. But if you're a first-time buyer, speak to someone that can talk you through the process, or share this video, because this video is talking you through the entire process. As I said, mortgage brokers, what they will do is go to different lenders, and hopefully they'll be transparent and show you all the different lenders that you could go to, find you the one that is right for you. So make sure you speak to a broker first. Here's what a lot of people have been waiting for: the mortgage process. As someone who does mortgages every day, it's straightforward and it's kind of mundane to me. But I do realize that most people don't understand the actual mortgage process. So let's go. Speak to a broker. As I said, speak to a broker, ask questions, give information, let them do a fact find. If you come to me, we'll go through everything. I'll get a feel for what your income is, what your outgoings are, the property price that you're looking to go after, as well as the deposit that you have. I'll then send you a checklist of all the items that I need: 3 months bank statements, 3 months pay slips, P60, proof of identification, proof of address, proof of deposit, and most importantly, a copy of your credit report from Check My File. Not from Equifax, not from Experian, not from ClearScore, from Check My File. Why? Check My File is the most comprehensive credit report, and it's going to tell me a lot of the stuff that I need to know, that I can make sure that as I'm doing my research, I'm finding you the lender that matches your criteria. So once I have all of that, we'll go through a full illustration, go through the numbers, find a product that you're interested with, and then we'll produce what's called an agreement in principle. You might be saying, but wait, I've talked to other brokers and they just do an agreement in principle without asking me for anything. This is probably one of the top reasons why people start the process with a broker like that. They have the agreement in principle. There's been no due diligence, or maybe the bank just produces an agreement in principle for you, or maybe you've gone online and just produced your own agreement in principle. And then you find the property, you go to purchase, and computer says no. This is because that agreement in principle was not based on criteria. So we've talked about criteria. So an agreement in principle that has not been sanity checked by a broker who's seen your credit report, understands your circumstances, might be a little bit shaky, because there might be some things in there that means that that particular lender cannot lend to you. So make sure you have an agreement in principle that has been sanity checked. Don't just go online and get it. Don't go on Rightmove or Zoopla and do that thing. Speak to a licensed mortgage broker who's going to go through everything, ask you questions, see your credit report, not charge you up front for all of this, but do all of that, then get you the agreement in principle, then charge you. So the agreement in principle will tell you how much you can borrow. That's when you go out and look for a property. And a tip to everybody watching: the estate agent is not your friend. I know some great estate agents, but the estate agent does not work for you. Guess who the estate agent works for? I heard you. Yes, the estate agent works for the seller, and that's not a bad thing. But that just means that they have a fiduciary responsibility to get the seller as much as possible. And when you're selling your property, you definitely want an estate agent that's going to get you as much as possible. But as a buyer, they're not your friend. So make sure that when you go out to look, if your top end of your budget is 400,000, if you tell them it's 400,000, almost guaranteed, they're going to show you houses at 410, 420. The other thing is, there's a saying that estate agents use. Well, two. One is that buyers are liars. And let's be honest, everybody's lying in the transaction. But the other thing that they say is people always buy at the top of their budget. So on the first conversation, when I'm doing the fact find with clients, frequently I'll say, well, how much does the house that you want to live in actually cost? And they'll say, it costs between 420 and 520. two completely different houses, obviously. So have a feel for what the top end you need is. That way we can work with the top end. If the top end of your budget is, let's just say 500,000, when you go to the estate agent, I'm not telling you to lie, but if you tell them 500,000, they're going to show you 510, 520, and then you're already above your budget. Whereas if you tell them 480, they're going to show you houses at 5. You negotiate down, or if you're smart, let me negotiate down for you, and you'll always be within the budget stated on the agreement in principle. So you've talked to a broker, got the agreement in principle, you found a property, you've let me negotiate and save you tens of thousands of pounds. Now, when you get the agreement in principle, what happens is the lender is saying, we will lend to John Smith, in theory, based on the information. When you get to full mortgage application, you've now found the property. This is when they attach the property details to the agreement in principle. So you might find that sometimes, as I said earlier, you had an agreement in principle, then you find a property and the lender says, we're not going to lend on that property. If you had let me negotiate the deal, or if the agreement in principle had been done and sanity checked, you can avoid this. But some reasons why a lender might not lend on a particular property might be because it's a short lease. It might be because they're oversaturated with mortgages in that area. There's various reasons. But if you've let the mortgage broker be involved with the negotiations, they'll probably have picked up on that. So you've talked to a broker, got the agreement in principle, you found the property, you're now completing the full mortgage application. You'll have to submit who your solicitor is. So start finding a solicitor early. This is when they come out and do a valuation. And this is a valuation and not a survey. The valuation is for the lender. The valuation is where the lender assesses how much they think the property is worth. And this is important because you might have negotiated a purchase price of 500,000, let's say, but the lender might go out and say, well, we think it's worth 480. This is another reason to let me negotiate the deal for you. But don't sweat it. If you go out, you find a house, get an offer accepted, and the valuation has come in low, there's things we can do. Usually we just go back to the seller and say, look, the bank thinks it's worth 480. I'm not going to buy a house for 500,000 that the lender thinks is worth 480. And most of the time, as long as you produce the document, sellers will go with that because they know no matter who goes to buy the property, as long as they're buying with a mortgage, evaluation is going to need to be done, and most banks are going to come in at the same price. But there's three things that can happen when you do the valuation. Thing number one, it can come in overvalue. So you've had an agreed price as 500,000. The bank has said, we think it's worth 520. No discussion there. Let's move forward. The other thing that can happen is it comes in at value. So it comes in at the 500,000 agreed. Again, nothing to talk about. The thing that could cause an issue is if it comes in lower, and if it's a substantial amount lower, it might completely change the deal. You may need to come out of pocket for more. But this is the next stage in the process. Once the valuation has been done and the underwriting has been done, this is when things get exciting. You get your full mortgage offer. At agreement in principle stage, the lender said that they would lend to you. Now we've done a full mortgage application. They said that they will lend to you for that property, and they put that in writing. A thing to consider and keep in mind, and I'm not trying to be negative, but remember, until the very end of the process, neither you nor the seller is obliged to complete the process. Either party can pull out. This is why it's important to speak to a mortgage broker, and once you have a deal approved, move quickly. Let them know that you're going to move with urgency. Don't drag your feet. Don't wait until you started the process to find your solicitor. Move with urgency, because some sellers won't take the property off the market until the valuation is done. Some won't take it off until a mortgage offer is in place. They might say sold subject to contract, but they might keep actually doing viewings. And if someone comes with a higher offer, you might lose it. So you get the full mortgage offer. At this point, the broker essentially hands you over to the solicitor, because once you have the full mortgage offer, everything else is between the solicitors. And remember earlier, I said that it takes 4 to 6 months. It's 4 to 6 months from this point. So 4 to 6 months from when you have the full mortgage offer. To get to this point, it might have taken a month, 2 months. But once you have the full mortgage offer, it's really between the solicitors. Make sure you stay engaged with the solicitor. Make sure you trust the solicitor. Make sure you ask questions, and never, ever, ever do not select your solicitor based on price. Don't just go on comparethesolicitor.com, find the cheapest solicitor. It will cost you more in the long run. It could prevent you from purchasing the property because the purchase process is only as fast as the slowest person. I, as your broker, will never be the slowest person, and hopefully you won't be the slowest person. So the next person that could slow down your deal is the solicitor. So don't pick your solicitor based on price. The £150 that you think you're saving, you're probably not. The next up, you'll exchange contracts. This is when the deal essentially becomes enforceable. Then you will complete. You will determine the exchange date and the completion date. That will be something that you agree upon between your solicitor and the seller's solicitor. You want to keep in mind, if you're renting, the completion date, you want to tie it in with when your lease ends or when you've given notice. This is probably one of the good things about the renters reform bill, because you'll be able to give, I think, 2 months notice. But always remember, as they always say in every single video, your home may be repossessed if you don't keep up the repayments on your mortgage. So that's the entire mortgage process. There's more detail to some of the steps, but roughly speaking, it looks like this. You speak to a broker, you get an agreement in principle after they've done a fact find and collected your documents. Don't pay your broker in advance. You find a property, let me negotiate the deal, get you the best price. You complete a full mortgage application. That's when your documents are now formally submitted to the lender. The lender is looking at that specific property. They order a valuation. It's a valuation, not a survey. You may want to do a survey, a home buyer survey for you, but the valuation is for the bank. You then can get the full mortgage offer after the underwriting's been done. Usually the underwriting takes about 10 to 15 business days, depending on the lender and how quick you're moving. The solicitors communicate, they do all the searches, you exchange, and then you get your keys. And I know this to be a fact. You don't come to me for a mortgage. You come to me to get your keys. And that's why I'm committed to making sure that I move quickly, I'm always responsive, and I give you the support and guidance that you need. How do you prepare? Here's how you prepare to get a mortgage. Tidy up your bank statements. So part of the tidy up your bank statement should be on the back of a conversation with a mortgage broker 6 months before you're ready to get your mortgage. So tidy up your bank statements, cancel any direct debits that you don't need, anything that's on there that just doesn't need to be there, get rid of it. Check your credit report. You should do that once a year, but certainly you should do that like at least once a year, but you should probably do it twice a year. So check your credit report. If there's anything that you need to dispute it before you start the mortgage process. Maximize your deposit, and you do that by putting your savings in a high interest savings account. Don't use these cultural savings methods. Put it in a savings account that's giving you interest and making you money. And if you're a younger person and you're not planning on buying for the next 12 months or more, so this only works if you're not planning on buying in the next 12 months or more, definitely consider opening what's called a lifetime ISA. As of the recording of this video, if you open a lifetime ISA and put £4,000 in it, the government will give you £1,000. Who else is going to give you £1,000? A lifetime ISA is a great product, but make sure you understand the implications. If you get it for the wrong reason or use it in the wrong way, there are severe penalties. So it's ideal for a younger person who's not looking to purchase within the next 12 months, that's going to maximize their savings by using the lifetime ISA. And as I always say, speak to a mortgage broker. I prefer that you speak to me, but even if you don't speak to me, speak to a mortgage broker who you trust, who you can be open with, and you can be honest with. Always be honest with the broker, because an experienced broker will figure everything out anyway. And then they might not want to work with you just because you didn't tell them about a thing that isn't a big deal, because they'd still be able to get you a mortgage. But as brokers, we have licenses, and we definitely don't want to put forward applications that might be fraudulent, or the person's just not being honest with us. So that's how you prepare. And here are a few more tips. Be honest and be realistic. If you're working, making £20,000 a year, the reality is you're not going to be able to buy a £600,000 house. Most income multipliers are about 4.25 to 4.5. So here's a bonus tip. Share this part of the video with absolutely everybody. The best way to figure out how much you can qualify for as a mortgage is take your salary and multiply it by 4. So if you're on $50,000 a year, multiply that by 4, that's $200,000. That's the mortgage you'll get. However, your deposit plus the mortgage you'll get will give you the house price. So if you had £15,000 on top of the £200,000 mortgage you can get, that would give you a house price of $215,000. But you're saying, but wait, I've seen that banks do 6 times mortgage and 7 times income. So you might see people advertising 6 times income and 7 times, or 4.25. The reason why I use the 4 times multiplier is because I'm going to have to back out any outgoings you have. So the conservative figure to get a good ballpark figure of what you qualify for as a mortgage is 4 times your salary for the mortgage amount plus the amount that you have for the deposit for the house price. A good broker thinks about the future. This is an emotional part of the video for me. Just kidding. But a good broker is not going to just get you a mortgage. They're going to think about what position you will be in when you need to remortgage. I had a client the other day, an amazing guy, really nice guy, really liked him. I could get him approved for a mortgage, but it was at such a high income multiplier. Plus, we were doing what's called a joint borrower sole proprietor. So his parents were on the mortgage. They were older. And I said, you know what? I can get you this mortgage, but you've told me that your parents don't want to be on the remortgage. So that means 2 years from now, because it was a 2-year deal, your parents, and you've made an agreement with them that when you go to remortgage, that you won't need their income. I didn't proceed with the deal because as much as I could get them across the line, I knew that 2 years from now, they would struggle to get another mortgage. And what I didn't want to do is put them in a situation where they have to go back to mom and dad and say, I can't get another mortgage, or make them what's called a mortgage prisoner. So if you have a good broker and they're telling you, we could do this, but this might not be best for them, don't do what a lot of people do, which is ghost that broker and go to the broker that tells them what they want to hear. Now, this is all dependent on having a good broker who's knowledgeable and who's explaining things to you. There's some brokers that, as long as it fits on paper and they can justify it, they're like, doesn't matter. It's not my family. I get my commission. I move on. But a good broker should really be concerned about what your exit strategy is, what your plans are for the future, what your career trajectory is. They'll take all of those things into account. And it may mean you buy a house that's a little bit less expensive. It may mean you wait. But if they're giving you advice, you should trust them enough to follow it. Set time aside to complete your fact find. 99.99999% of delays are caused by the client. Sorry, guys, but I'm just being honest. People come to me, they're in a rush, they need things done yesterday. I move super fast. Then I'm waiting and waiting and waiting and waiting. I don't mind waiting, but set some time aside to complete the documents, to complete the fact find, to gather your documents, because it's straightforward and it should take about 30 minutes if you set the time aside, but life happens. So if you come to a broker and you need things to move quickly, make sure you set some time aside to provide the documents. Here's another one. Only supply what has been requested. If I ask you for 3 months bank statements, don't send me 4. If I ask you for the last 3 months bank statements, send me the last 3 months bank statements. So the most recent bank statements. Only send what you have been asked for, because any broker will tell you we never send the bank anything that they don't ask for, because it can just cause problems. Supply exactly what has been requested. So that might sound like exactly the same thing, but if I tell you I need your passport as a PDF with at least 3 inches of white space around it with the full passport showing, that's what I need. I don't need half your passport or a picture of you. I need exactly what I asked for. And it's not just me being pedantic. It's because I know what the bank wants. And what we don't want to do is start moving forward. I send them over a document. They're like, nah, this is poor quality. So make sure you supply it exactly as it's requested. If we need 3.5 months, send 3.5 months. If we need a utility bill for proof of address, don't send me your bank statement. Read the instructions. It's for your good and to speed your deal along. So those are some of my top tips on getting a mortgage, making sure that it moves quickly, making sure that you get the very best deal. My name is Anthony Lindsay, and I've been in finance for over 30 years. I make these videos to share information, to educate, and to improve people's financial literacy. They're not hype videos. They're not clickbait. I'm not here to tell you that the bank is out to get you and the system is against you, because I know that not to be true. You might find them boring. You might even find them quite long, but I like to explain these things. And this is an overview. I'm not talking to you as a person right now, but I would love to talk to you, get your information, and tell you how much you can qualify for. You can scan the QR code. I am a real person. I will always treat you like a family member. My goal is to provide a service that people can trust, that people will tell their friends about. But most importantly, I want to be honest. I want to do what's in your best interest, and I want to be fast. But I never compromise speed for attention to detail. I want to put the best application forward with the best lender that's providing you with the very best mortgage that you qualify for. Make sure when you're speaking to a mortgage broker, you listen to what they're explaining. Make sure you're working with someone who you trust. That way you can be open and honest with them. And also it means that when they give you advice and guidance, you're more likely to listen to what they're saying. If you need a mortgage or you know someone who does, please share my details. And if you've watched any part of this video and you would like to leave a comment, please leave a comment. If you have any ideas or suggestions on videos that I can do in the future, please leave that in the comment. But make sure you subscribe. I make these videos and YouTube will put these videos in front of more people who need this information if you subscribe. It also means as I make new videos, you'll be notified of the new videos. Comments are useful as well. Share this with friends and family. And remember, unless you've talked to a qualified mortgage broker who has gone through your details, do not rule yourself out from getting a mortgage. If you have a skilled worker visa, if you have a low deposit, if you have credit issues. The thing with skilled worker visas, I do them all day long. There are a lot of lenders that will lend to people with skilled worker visas, even if you have as little as a 5% deposit. So don't rule yourself out. Don't listen to other people in your community that maybe because they couldn't get a mortgage, they're telling you that you can't. Always speak to a qualified mortgage broker. And don't forget, Saturday, March 21st, 2026, we're doing the East London Business Expo. Connect with me on all of my socials. Connect with me on LinkedIn. And don't forget my book, A Mortgage is a Really Big Loan. It's available on Amazon. Thanks for watching, and please share this video, like this video, and leave a comment.